In this video, traders, we're going to look at the concept, what is a Chinese wall? Stay tuned. Hey everyone, welcome to you traders. Okay, so what is a Chinese wall? Apart from a wall made in China or the Great Wall of China, what is it in terms of finance and the financial industry? What does it mean? How does it work? And how does it affect us as traders? Okay, so we have a situation where we've got a big bank here, or we've got a big financial institution, and they run a couple of different, well, they run multiple different segments and arms and sections and kind of departments. And in one department we've got mergers and acquisitions, and they're working to for a company to buy another company. They're doing all the legwork that goes into that, the due diligence, putting all the package together and all the kind of stuff that goes into that transaction. And they know that company X is buying company Y. And here's two guys talking. They're like, oh yeah, company X is buying company Y. That's the job they're doing. That's what they're paid to do. Big team behind that, doing that. That stock's going to fly because they're going to bid, let's say it's trading at, I don't know, $50 a share. And this other company is going to bid $80 a share. Now, obviously, when that comes out and hits the general market, that stock is going to go from $50 to $80 or slightly less, because there'll be a bit of risk discount on it instantly, because that's the new valuation of the company. Now, in another department, we've got these guys who are trading. Maybe they're trading for the wealth management part of the bank, or proprietary, maybe a bit different now because they've changed the regulations, but just assume that they're trading for some kind of financial benefit, so they make money on the appreciation of any assets they buy, however that may be. So they're there and they're chatting away and say, oh, how do we find the next mega stock? So this is the same company. They're under the same umbrella, so to speak, the same kind of bigger global brand, but they have kind of different things. These guys are working for a company for a merger. These guys are trying to make money. Now, you can imagine that if these guys here, these traders, these fund managers, these wealth managers, however you want to look at them, if they found out that that company, that these other guys in this department working on a merger between company X and Y, and that was going to be worth $80, they could buy as much of that stock as they could, knowing that eventually that stock's going to go from 50 to 80 and make them a nice bit of profit, make their clients a nice bit of profit, and just generally make some money. Now, of course, that's not ethical or legal. Now, it's not legal because legislation states that there should be what's called a Chinese wall in between the two. Now, it's not a physical wall. It could actually be, but it's really a way and a procedure and a set of kind of rules, if you like, in place that ensure that information doesn't go from that department to that department, or from that department. More importantly, it's from that department to that department, as you can see, but it's making sure that info doesn't leak from there to there. Now, that could well be proximity. You've not got the traders sitting in the same big office building as the mergers, because they're going to hear stuff. It would be a very, very simple one. So there may well be a physical separation between the two. You've got certain procedures with emails, and we're chatting, and these guys will all know not to share that information outside the walls of, you know, certain authorized people. There'll be kind of rules in place for that. And similarly, the traders, you know, they'll be told, hey, listen, you know, we're not trading on information from the other department, so don't go fishing for information from the other department. Don't go trying to, you know, speak to someone in the gents and ask them, you know, how they get on in mergers. So obviously some people, as with everything, guys, there's going to be the odd unscrupulous character who breaks this Chinese wall to make money for themselves or make money for the company and bonuses and stuff. But there are obviously consequences for that, legal consequences. But ultimately speaking, this kind of invisible barrier is the Chinese wall. It's in place in many institutions, and not necessarily as a kind of extreme example from mergers and traders or wealth managers. Whenever there's information that if it was made available to someone else who could trade off it, could make profit, there's going to be that, you need to have that kind of wall in place to stop that information filtering and flowing out and moving out. So they can do their job and they can get paid from that. They can do their job independent from that and get paid on their results based on that. All right, guys, that's a Chinese wall. Hope you enjoyed the video. See you in the next one. Take care. Goodbye.